As a listener to our channel, you know about gold, and it won't shock you, as you've talked about it, that your friends and people you know have not been on the same channel as you. Guess what? People are about to jump on the bandwagon. Since the beginning of 2022, gold has climbed 45% and now sits well above $2,600 per ounce. However, most Western investors have been largely absent from the bold move upward. Analysts say high rates are to blame, but rates are dropping. So now that money from the West looks like it's about to flow in, which could extend gold's rally even further. Economic uncertainty means you have to keep up with what's happening. Make sure you subscribe and we'll keep you in the know. Central bank gold demand has been at or near record levels for the last 2.5 years. That demand is credited with providing much of the price support enjoyed by gold over that same period. However, the dominant buyers had been central banks from areas outside the West, such as Eastern Europe and Asia. As for retail gold purchases, those too have been dominated by non-Western countries, particularly China and India. Western investors have largely been sitting out in part because they have been making money on interest. Now, interest rates are falling and the gold is becoming the clear choice. Much of gold buying over the last few years has been attributed to the desire of central banks and other investors in emerging markets to hedge against heightened economic, fiscal, and geopolitical uncertainty. This demand for gold as a safe haven has been so great that the metal's prices have soared despite the challenges posed by rising interest rates. Western investors, however, tend to consider assets exclusively in terms of their potential to serve as a driver of portfolio performance. In the case of gold, that potential has been rooted in interest rates historically. Alex Charters, portfolio manager at Ruffer, puts it this way: gold doesn't pay you any interest, so the opportunity cost of holding it is higher. Quite a lot of Western investors seem to have been following that playbook, but that's not true for the rest of the world. Unfortunately, many investors missed out on what gold has appreciated. However, with falling rates, there's time for Western investors to get back in the gold game. As a recent report at Reuters suggested, inflows into gold exchange-traded funds, particularly from Western investors, are set to rise in the coming months, adding yet more positive stimulus for already record-high bullion prices. Interest rate cutting cycles in the U.S., Europe, and laterally China have fanned bullish sentiment, with players focused on further gains, including another record milestone of $3,000. Strategists say they expect to see a cycle of lower interest rates trigger increasing flows of money into exchange-traded products, which are especially popular with Western investors. Suki Cooper, analyst at Standard Chartered, is one of those strategists and said, "Now that the rate-cutting cycle has commenced, we think ETP inflows are likely to accelerate, supporting the next leg higher in gold." Analysts at Goldman Sachs agree, saying, Fed cuts are poised to bring Western capital back into gold ETFs, a component largely absent of the sharp gold rally observed in the last 2 years. Data suggests many investors are starting to shift back into gold ETFs as we examine the money flow. The World Gold Council reports that gold ETFs worldwide were subject to net inflows of 28.5 metric tons, or $2.1 billion in August. Notably, 17.2 metric tons, or $1.4 billion of it came from North America. Analysts at Bank of America and Citibank suggest a revived rate cut regime could push gold as high as $3,000 per ounce by sometime in 2025. JP Morgan has a 2025 price target of $2,850 per ounce, saying, investor flow and retail-focused ETF bills in particular continue to hold the key to a further sustained rally over the upcoming Fed cutting cycle. Numerous analysts agree that gold's resilience since 2022 in the face of historic rate tightening has been exceptional. You and I have watched gold appreciate in economic headwinds of high interest rates and tight liquidity over the last couple of years. Now that rates are dropping and we're getting economic tailwinds and Western investors are getting in the game, gold's rally could continue for some time. That's why I suggest you take the time to learn more about what's really going on in the economy by attending our exclusive one-on-one web conference at AugustaPreciousMetals.com/webconference.